And the important thing to remember, although this is a gold conference, really gold exploration is really the key, because those companies that expand their market cap, they don't do that because you got the direction of the gold price right. They got the direction of the drill bit right, or as what did Owen call it, the rotating lie detector. So this is an extraordinary industry, and at that Resources Roundup conference, there were people there who had multi-billion-dollar market caps who had been at that conference when they were penny stocks. So this is an extraordinary industry. It absolutely is, and particularly on gold, and gold for a very long time, obviously in this country, part of this country. You go to Melbourne, all the best buildings in Melbourne were built in the gold rush. So look, we've got a panel here. Our discussion is what's next for gold investors as inflation bites. And Alexander Scanlon from Barton Gold. Alex is going to come back up and join us, who just presented on Barton, so he's representing the wannabe producers. We've got Brett Fletcher from Ravenswood Gold, who is going to be representing the producers and want to be bigger. We've got Cameron Alexander, who actually turns their doré into gold and allows it to actually get to the market. So the refiner, a very valuable part of it, in distributing our gold all over the world. I was once upon a time a very large customer of the Perth Mint, and I used to be, in my role at Rothschild, was probably the largest exporter of gold from Australia to markets all around the world. Then decided I'd set up in competition and eventually end up merging with the Perth Mint. So Cameron and I go back quite a long way. And we've also got Mark Pay, where are you? From Rush Gold?
Right behind you.
Oh, you're here already, snuck up. So this is fascinating, because then we've got the other end. You saw his colleagues speak just shortly. Jody Stanton spoke earlier on Rush Gold, and really the idea of taking physical gold, putting it in a vault, but then allowing you to carry your right to that gold in a vault anywhere you want on your smartphone and buy and trade gold, I think is just an extraordinary addition. So we've really got from the exploration in South Australia through to production to the refiner to the other end. And me, I've been in the business 38 years. I spent my first 20 years as Rothschild. I started as a gold trader, arbitraging between Hong Kong and Australia back when that was a thing. Then I started financing mines, and then 18 years ago I decided that mining companies needed to think more cleverly about how they sell their gold and how they raise finance. I started a business called Noah's Rule, of which I'm the joint managing director, and we work with many of the gold mining companies, and a lot of the people here I've worked with in the past and other roles they've been in, but very active in the gold space. And I think I said yesterday in my presentation, my Twitter handle is the Gold Beast. I'm neither bull or bear or bug. I'd like to be around the gold. You can make a lot of money in the gold market, whether it's going up or going down. But I will say, I think in the next little while, it's going up. So I didn't say in my presentation yesterday, but just to start the ball rolling, I did say that I think the relationship between the Dow and the gold is very important. And when stocks are falling or gold is outperforming stocks as they are now, that's the best time to be in gold. Pierre Lassonde came to Australia years ago and said he thinks that ratio will go back to 1 to 1. That would be that the gold price and the Dow Jones would be the same. Today, US dollar gold price is 1,807 and the Dow Jones is around 30,000. So you can pick your number where they will meet. But I believe before I die, unless I get run over by a bus on the way home tonight, that before I die, I will see the Dow and gold at 1 to 1. So that's my bullish forecast for you. It'll be by Christmas. I just can't tell you which year. So that's enough about me. Let's get the panel just to quickly introduce themselves so you get a bit of an angle. And I want them to do it from the perspective of how they came to the gold business. So we don't want your entire life story, Mark, because it looks like that'd be a long story. What we want is how you came to gold, and then we'll go along the thing doing the same thing. So a bit of a potted history of how you came to gold and your sort of take on gold, very briefly.
Yeah, sure. Just very quickly. I came to Australia to run Microsoft's financial services practice, and so I've always sort of been around financial services, but also with technology. And I think with the discussion around cryptocurrencies and kind of what comes next for payments and things like this, we started really deconstructing, what's the nature of money in the world, and you quickly arrive at the highest form of money in the world, which is gold. And so it gets ignored, it gets pretended that it doesn't exist, it gets marginalized, but it's always still fits that definition. So
lurking there in the background. Fantastic. Thank you. Thanks a lot. Cameron?
Yeah, look, I've been working in the old gold industry for some time. Joined Perth Mint probably 2 years ago, just under now. Prior to that, I was with Thomson Reuters as the head of precious metals research, which was taken out by, they bought out GFMS, which is Goldfields Mineral Services. Spending a lot of time as an analyst mainly in the emerging markets. So spent a lot of time in India and Southeast Asia, and China particularly. really drilling down into the demand and supply fundamentals of those markets, seeing where the gold actually goes to and how it's actually being consumed.
Thanks, Cameron.
Yeah, look, my background is I am an economist and structured financier, so I've spent the last 15 or 20 years working in structured principal investments. Was doing a lot in the resources sector, and around 2016, 2017, really started to look at some of the large-scale, long-term, sort of structurally profound risk factors we saw piling up in the market, and made a decision to really look at gold as a long-term investment. And that's when we started putting together a gold play, which I am now the managing director.
Okay, yes. So for me, I'm originally from Broken Hill in New South Wales. I'm a sort of a third-generation miner, so I kind of was told what I was going to do. So I'm a mining engineer by background, and look, for the last 35 years now, I've really been mining base metals and gold. Probably the biggest exposure I had six years with Newcrest, sort of Papua New Guinea, Indonesia, up at Lihir, and really got into some serious stuff up there. And for the last few years now, I've been working with EMR. So I was up at Capricorn Copper for a couple of years before it floated off into 29Metals, and obviously I'm now at Ravenswood Gold, so building Queensland's largest gold mine.
I had the opportunity some years ago to visit the Lihir gold mine, and that is really one of the most extraordinary things. I mean, you're on a tropical island, there's little kids running around, they've got these pickaninny kids with sort of blonde hair, the local, and the people in just houses on stilts, and you come around the corner and you would have thought like you'd found the secret base of Dr. No in a James Bond movie. And there's this incredible thing there. So, and gold, I mean, just really quite remarkable what engineers do. I've also been up to the Papua New Guinea Highlands, to Porgera, and just stood there in awe of the logistics. So, I mean, the mining industry, I mean, these guys are all trying to find it, or most of them are mining it. It is amazing when you look at it. And I think one of the things that, for me, I just wanted to touch on was a bit like, we seem to have this thing that I think mining in this country is a little bit on the nose in terms of the kind of green view of the world and what's going on. Yet we're not going to have a green future without mining. And we sort of talked about ESG, but it is surprising to me that this country was largely built on on mining and agriculture. That's what we are. We're a mine and a farm when it comes down to it. If we were a company, that's what the category we'd put in the ASX if we had a share price in Australia. We're a mine and a farm, but both those things seem to be denigrated over the years. So, I mean, one of the things I think is just maybe from your perspective as a miner, I mean, what are the pressures at the moment, these sort of ESG pressures, and what's that doing to gold producers? What do you think the impacts are in the short and medium term?
Yeah, well, look, ESG, I guess, is sort of fundamental to our business, and I guess my view on it is if the E part is an important part because it's the environmental part, and I think we all have a shared responsibility to want to do the right thing by the environment. And I actually think miners actually do a fantastic job, to be quite honest, and I think highly underrated the enormous amount of effort and, as you say, engineering and really good quality science that goes into that. The social aspects for us, particularly at Ravenswood, is absolutely critical. I mean, I think all mining operations, you only have a mine if the community with which is hosting you wants you to be there. And if they don't want you to be there, you won't be there. It doesn't matter what the law is. So I think that for us is really key. There's probably no community closer to a mine anywhere in Australia than the Ravenswood community. I mean, we're literally the edge of the pit's 200 metres away from the pub, so it's pretty close. It's really close. And the governance part, I think that's pretty fundamentally important to business as well. I mean, I don't think good governance is necessarily a bad thing. I don't see it as being onerous. As long as you can sort of look at it from a proactive perspective and just try to make it work with your business, I think it's just something that we generally want to do. We certainly don't need any more legislation and bureaucracy. I mean, that's, in my mind, one of the biggest issues in Australia at the moment is we need to find ways to be smarter, to permit quicker, to give better access to land. Because that really underpins our entire business. We need to be able to move faster, and we need the government to get out of the way and let us get on with it.
Thanks. And to that point, you just talked about your grant, Alex.
Yeah.
So, I mean, in the sense of government getting out of the way, that seems to be a pretty good thing, of actually getting in front and actually really putting money in. How much money in total is the government of South Australia putting out in those grants?
So this year they awarded $3.26 million, and that went to a collection somewhere between 10 and 15 recipients. But I think it does reflect an attitude of sort of getting ahead of this issue. I think, the South Australian government has had the benefit of some very large producers in the IOCG belt, but by and large across the state, it's one of these things where, as a state, South Australia is very good at working hand in hand with miners and trying to, one, encourage large participants to be good participants, but also to try to build things in the state. So, we're obviously very grateful for the support. South Australian government is also a government you can actually pick up the phone and talk to people, and that really does make a big difference as well. That's part of this getting out of the way. It is also being there to help you solve problems. That's really important.
That's probably the good thing about only having a couple of hundred people in the state, isn't it?
That's right. Yeah.
Everyone knows everyone.
If you're counting the vacationers.
Yeah. That's right. Yeah. Sorry, I should have said too. After I want to turn this over to the audience, and so please have your questions ready, because I think really I just want to give you a little bit of a understanding of the character of the pair up here and some of their backgrounds, and then really you've all sat here and listened for very diligently. And thank you, by the way, for filling up. I did send a photo to my colleagues about an hour ago. I said, I'm hoping there will be more people in the audience than there are on the panel by the time we get started. But it's been wonderful to see how the numbers have swelled back up. So thank you. Cameron, we were chatting before you came up here, and you spent a lot of time in the field for Goldfields Mineral Services talking to the buyers. Yep. And buyers make markets at the end of the day. Like, we can produce all the stuff we like, but if there isn't someone to buy it, it's kind of not worth anything, right? So the buyers are very important in Asia there. But can you just, I chatted to you before about, I saw a picture during COVID of people talking, oh, look at the demand for gold is going crazy, and they showed a gold shop in Thailand. And knowing the markets I do, I thought, no, the people in Thailand in the middle of COVID, they're not queuing up to buy gold. They're queuing up to sell some of their gold. It's like, because they don't go to the handy bank, they don't have money in the bank. All their savings are in gold, and there's no tourism. They have no money. They're actually selling gold back. So at the hubbub of the height of the buying, when gold was at its height during the COVID, it's nearly 2 years ago now, the highs, people in Asia were queuing up to sell gold. What was the queue at the Perth Mint?
Very, very, very long queues. I mean, I think it's almost counterintuitive. When the gold price is on the rise, a lot of the Western investors will come into the market to chase it up, almost by fear of missing out. They don't want to have that chance of missing out on potential upside. You compare that to Asian markets, and they're far more price sensitive. And they know when it's a good price. They know the buy level will come in at historic levels where they know in their local currency. A price below that level is a good buy signal, and they'll come in and they'll take that for a ride. And when they know at the top, they'll sell out and take the profits, and just wait for that buy opportunity again. It's quite common.
So basically, in Asia, the people who have been the historical custodians, I think, of gold, really, they were the ones consuming all the gold in the late 90s, to the extent it didn't go to zero in the late 90s. It was really about the Asian market, the sponge, as I call it, the gold sponge. So they're buying it all the time as real money, to your point, Mark. It's in the background there. They're buying it because when there's a crisis and paper money is not worth anything, that's where they'll have value, right? Then gold and value. We in the West still, unfortunately, not we in this room, of course, we're much above that, but the other people that queue up outside the Perth Mint, it seems like generally people in the West who think they're more sophisticated are always paying the high. And we're generally buying it off the people in Asia who bought it at the low. So we need to turn that round. We need to be accumulating gold. Oh, cheers. We need to, so you're on an even more civilised conference, Kerry, than I've been to before. So we need to turn that around. So instead of paying the high, we need to be thinking about accumulating it all the time, which is a perfect segue to you, sir, your product.
So I think if you think of the fundamental reason that the Asian buyer accumulates at when prices are down, it's because of the experience they've had with their local currency. And you had the Asian financial crisis. You lost 50% in a week in your local currency. And so we haven't experienced that in the West, and I'll add the word yet. And so it feels to me like we're in the process of starting to experience that as fundamental sovereign currency problems kind of creep their way up the scale to the major currencies. And so I think we are going to learn that lesson, and we can learn it the easy way or the hard way. Everybody at the conference here is smart enough to know that lesson already. I think if you deconstruct, the why behind that, it gives you a tremendous insight. We see the same thing. We have customers in the U.S., customers in Australia. When prices are going up, they're the buyers. When we have customers in India, and when prices are down, they're the buyers. So we see the same thing.
Yeah, and I mean, even to the point that I know when gold was very high a couple of years ago in 2011, 2012, like people were turning up to Indian weddings and giving cash. It was unheard of. Because the gold price was so high, they said it would be ridiculous for me to waste money buying gold to give you for your wedding now. So I'm giving you the cash, and take this cash, and when the gold price falls to a more sensible level, buy it then, right? So, I mean, they really understand and kind of recognise value. And just quickly, I would tell you my favourite story about sort of in the Asian financial crisis. I had had a meeting with a gentleman who was the largest customer of the Rothschild Singapore office, taking gold to Indonesia. How he got it there, that was his business. So Singapore was a free port, but they used to smuggle an enormous amount of gold, these people. But Singapore, they don't ask any questions when you're leaving. It's only when you're coming in they've got a problem. But anyway, and he had told me that he had, during the currency had collapsed and property in Indonesia had collapsed. And, I think he said he had sold a house for 1 kilo and then bought it back for half a kilo. And, he'd bought a house for 1 kilo and then he'd sold it for 2 kilos of gold. And I said, but did you make any money? Because I was thinking about the price of gold, like what was the price when you sold it and what was, when you bought it and what was the price for you sold it? Like, did you make money? He said, he just looked at me like I was an idiot. He's just like, well, I started with 1 kilo and now I've got 2 kilos. So I've got twice as much gold. Now, because in the long run, in his view, the gold will be most valuable because of that currency devaluation. The other thing that was really interesting, and before you were at the Perth Mint, Cameron, but during the Asian financial crisis again, while Western people were racing to buy gold, the gold that came out of Asia during the Asian crisis was unbelievable because the rupee collapsed, the rupee gold price went up and everyone sold. And I think the Perth Mint had a backlog of like 12 or 18 months to refine all of the gold scrap that had come out of Indonesia as the people had sold during that crisis as they needed the money. So it was extraordinary. So again, you had the West all got loaded up on the gold at the highs, the Asians got it coming back to buy lower. Yeah. And we had been selling gold for years out of Rothschild Singapore always, and we were buying so much scrap back that the vault was full, and the vault was on the 13th floor of the office building in Singapore. And the guy woke up one night in absolute panic in the Asian crisis out of the thing because he never actually knew what the loading was on the vault. And instead of having a few little bars and the people would come in and put them in their vests and go off to smuggle somewhere in the world, he now had boxes and boxes of all this scrap that had come back from Indonesia. And he kind of woke up in a cold sweat, imagining he was going to come to work the next day and all the gold bars would be in B7 in the car park and there was a hole as they'd all just fallen through the vault. So again, quite unbelievable. Asia is the sponge. And then at various times they wring that sponge out. And what we do see, as I tend to think, is that gold gets absorbed by that sponge. We tend to tip it on the market with a bucket, and that's certainly what we saw in 2013 as a good example. So are there any questions from the floor? Does anybody would like to ask any of these panel members in their particular area?
Just on that particular point, I believe Korea at the time in the financial crisis was saved by the fact that they asked all their people to put all their jewellery or gold and take it to the nearest street corner, and that was some billions of dollars that saved Korea. I mean, I don't know. Is that anyone comment on that? It's not a question.
Yeah, look, I think right through. I think right through Asia is probably a good example about, particularly the older generations who've been through the financial crisis. That saved the family. They had the gold reserves. And I think that's been instilled in the communities, because even today, younger generations will still look to physical gold. They're now looking to other options. They can buy gold other ways, but they still have that mentality of buying gold as a way of storing wealth and protecting themselves from that currency devaluation.
So I actually asked the question earlier to the speaker earlier today, but it seems to me the most obvious issue that increased big spike in interest rates by the US and the strong currency. Then we're going to have another Asian financial crisis where we'll not be able to pay back.
Yeah.
Sorry, I'm just wondering if anyone on the panel has a view of another Asian financial crisis, because it was 2 years ahead of the various other crises we've had in the Western world. The huge spike in interest rates and strength of the US dollar is going to make it very difficult for a lot of these Southeast Asian nations to repay their borrowers. Anyway, any questions? Any comments?
Look, I mean, the world's largest borrower is the United States. It's the issuer of this paper, and it's the world's largest borrower, running a $3 trillion a year deficit, right? So it's not even just foreign nations who somehow have to, shoulder an increasing US dollar interest tab. It's the United States itself. I think the bigger question is probably, do we actually see any sustained rate shock to the upside? Does the United States essentially chicken out on raising rates because, they sink their own ship? If there is a sustained rate increase, yeah, I think pretty much everyone's going to have an impossible time refinancing all this paper. And what that means, I don't know. We've never had this much commercial paper in circulation, this much subordinated low-quality paper in circulation. So it's pretty terrifying if you consider that the U.S. You can look at money supply charts. The U.S. M1 money supply is about 13 times what it was post-GFC. It is approximately 5 times today what it was at the outset of COVID. So how do we deal with all this? Well, we've never been faced with a structural dislocation like that in our credit or money markets before. Nobody knows how this is going to turn out. And probably not much of an answer, really.
No, I think that's a great answer. But I would also say that you go, let's use the GFC. So what did you say? How much did you say that you think the US dollar on issue has expanded?
Well, so the US M1 money supply pre-GFC was about 1.3 trillion. Post-GFC response, it was about 1.6 trillion. The interesting thing is that, at this time, so if you remember, there's this initial TARP bailout was about $700 billion. Everybody relaxed because the excuse was, oh, don't worry, this is a one-off. This is to save the financial system. And then everybody said, okay, great, everything's stable, and then walked away. And central bankers in the West, so to speak, for the first time in life had discovered free money policies. They turned off the lights, they closed the door, they locked the door, and they just left the money machine on, right? They left the printers on. So by the time we come to the beginning of COVID, the US M1 money supply is nearing $4 trillion. So approximately 3 times what it was post-GFC, despite the fact that we've been in a 10-year bull market.
Sorry, go on.
And then, I mean, the analogy I use is sort of, for 10 years, everyone's in a drunken buying spree, and from monetary policy, we are firing our arrows into an empty field at an enemy who's not there, and then we have somebody who comes to burn down the castle, and we have absolutely no arrows to fire because our interest rates are 0. So what do we have to do? Well, we double down we quintuple down on monetary issuance, and we quintuple the M1 money supply in the span of 24 months.
In an environment where, since the GFC, the amount of gold in circulation has only increased by about 2 to 3% per year. Yeah. So, they all like to talk in the crypto world about the stock to flow, like there's a stock. But in gold, all the gold that's ever been mined in the history of the world still exists, and it would probably just about fit into this room, not quite, but I think it wouldn't be 2 metres high on the playing field of the MCG. That's an amazing thing if you think about it. Sorry, Kerry? Question? Oh, yeah, sure. Sorry.
At the present time, is Asia buying or selling? And what is the West doing, buying or selling? I was interested in that, the comments on that.
Yep. Well, I mean, I think the gold price is really stable. Right, has been, I mean, if you think about it, it's at the 200-day, it's just below the 200-day moving average at the moment. 200-day moving average in US dollar gold is about 1,830. So the average price over the last 200 trading days is 1,830. Today it's 1,807, and last week it was a bit higher. So gold is actually quite stable. Now, we know that gold producers are producing it as fast as they possibly can, and their costs are going up, so they want to produce. So someone's clearly buying that. We know that central banks Cameron are buying quite a lot. That's an interesting feature. They don't particularly encourage the population to buy. They don't want us to wake up to what's going on, but they don't trust one another. So they're all busy getting back in the business of buying it after they... And I don't know that it's necessarily that we should take... It's a good thing that central banks are buying like they're smart, because a lot of them sold on the low, right? They're just people like us. But they're certainly buying. Central banks are buying. Yes, Asia is buying all the time. I mean, there's not a week where Asia doesn't buy gold. It's just how much they buy. So as Cameron said, when the price goes down, they buy more.
Yeah, I'd make the point though that in terms of, if you look at say like Thailand, that can swing from a buyer to a seller's market within a $100 movement in the gold price, even less sometimes. So one week they might be buying and the price drops $30, and the next time it goes up $30, they're on the sell. So it's quite a continued cycle. But I would say generally, you know, India has been a little bit soft because the market's been in a discount for some time, for the last little while. And I think that will probably change as we get closer to the sort of wedding season and festival season, when demand does kick up, you know, naturally within the market. China, probably a good one as well, has been quite aggressively buying in probably the last 18 months. We have seen a bit of a decline in that recently with the market closed due to the COVID shutdowns they've had there. We are seeing that the flows are now going back into China with the Shanghai Gold Exchange opening up. So I would expect those flows to pick up again once those sort of, that gold that hasn't moved in, we move through those stocks, and then we should start seeing some good solid demand again. But generally, as a general rule, Asia's always buying.
And to Mark's point about currency weakness, it is certainly the simplest way if you're in a controlled environment like India or China, where the government makes it difficult for you to get your money out of the country. Essentially, if you can get your hands on gold, you get your money out of the country. Because when you use Indian rupee to buy gold, you go short the Indian rupee and you go long gold. So if your currency falls, the local currency price will go up. So that's, at the end of the day, that's the main thing that granddad and great-granddad, everyone told you, you use paper money to pay your bills, accumulate your savings in gold. It's as simple as that. You just do, you know, land or gold. You just don't hold on to paper money. There's no trust for it, quite rightly. We're the ones that have just been lulled into the false sense of security that we can trust the paper money because they devalue it a bit more slowly here. Keith, 3 parts.
So I'm just asking the general classic gold panel question. As in, what does each panellist expect the gold price to be in 1 year's time?
1 year's time.
One question. It's a first. Each panellist to give their view on gold in 12 months' time.
I'd love to go last.
I'm happy to go first. I'd say 12 months' time in US dollars, it'll be 2,500.
Yeah, look, I think I will hedge this by saying, and this kind of goes to a lot of Peter's commentary earlier this morning, is, you know, my view is that gold is sort of the capitulation trade once institutional money realizes it's been in the wrong position for way too long. So there tends to be this lagged effect even when we find, you know, massively inflationary effects. The question is, how far along this capitulation trade or positioning are we? I would venture that in 12 months we're somewhere between 2,000 and 2,500 US, but towards the upper end of that, and looking at something that looks more like a breakout that's actually defined by the macroeconomic factors at play.
Yeah, it's a little bit hard for me. I can't give guidance on price. It's not what we do at the Perth Mint. But I would say that, trying to be neutral here, I would say that I think that what the current climate is very supportive of higher prices. And I think the sort of price level that these gentlemen have indicated would be something I'd be very comfortable with. I think, I think in the short term, there could be some weakness in the gold price. I think with the sell-off that we're seeing at the moment on equities, I wouldn't be surprised to see gold price lose a little bit of ground. As there's a bit of a flight to margin call on some of the stocks that are getting big losses. So I wouldn't see, I would be quite surprised if we didn't see a further fall in the gold price before a strong recovery to the later stage of the year. Yeah. My personal view is that we would test record prices, in my personal view.
So I guess my comment is that maybe that question doesn't matter as much as people think, that we would measure, you know, the value of our gold. I'd like to measure the value of my gold in kilograms, and to have a number against it that is an inflationary currency that is inflating to the stratosphere, it doesn't seem to really be, you know, the way to measure wealth. And so, you know, we believe wealth is gold. And you know, it's a nice number to reference with the USD price, the AUD price. But you know, I unfortunately was at Woolies the other day, and I had an avocado and a chicken and a loaf of bread, and it was $29. And so we're watching in real time as the value of our vaunted currency is dissolving underneath us. So maybe ask me the price of gold in Bitcoin or something. That's a joke, by the way.
Yeah. So taking a sort of a slightly serious element from your thing, and then I will give a price, yes. Yeah, I will, absolutely, Keith. When have you ever known me not to? Firstly, I think I have no doubt in my mind that whatever gold you own will buy you more of almost anything else that you currently own or you desire to own 12 months from now. I think that gold may be lower a year from now. The gold price may be lower, but it will buy you more shares. It will buy you more Sydney property. It will buy you more avocados. Well, just about whatever. So I think that's the one thing. I think we're going in the phase where gold will outperform. But the thing that you've got to understand in that is that it is not, it's like the man with the house. Sean, you don't care. I got 2 kilos, I used to have 1. He may have lost rupee on that, but he had twice as much gold in the long one. He was right. And I think that's the point you're making, Mark, and it's very early. So I think that's the first thing to me. I look where it now, whatever you've got in general equities, whatever, if you sell some general equities and buy some gold, your kids will say, oh, Dad, you lost money on the gold, or Mum, you lost money on the gold. You go, yes, but I can buy back what I sold and then some, or have some gold left over. So that would be my first view. I think gold will outperform. As to whether then the US dollar price, in my presentation yesterday, I said it has to be a bull market in all currencies to be a bull market. We are in a bull market. Every currency that I showed you yesterday of 10 currencies, consuming, producing nations, gold is going up. Gold is above its long-term trends. It is outperforming general equities at the moment. So even people that hate gold have to buy it. So I have to believe that there is a very strong chance that gold will be higher. If we take out the highs of 18 months ago, you will see a move in gold like we saw post the GFC. All right? So the caveat I would have to say is between now and when you see that move, you may see a sell-off in gold like we had in the GFC. So I am very comfortable saying to you that gold could be $2,500 a year from now, $2,350, $2,500 US dollars a year from now, but you could have seen $1,650 or $1,700 first in a brief period if we have like a big liquidity event, because gold is very liquid, it is easy to sell. Yeah. So a lot of people, when you've got no choice, or they'll sell it because other things are cheaper. Yeah. So people in Asia, if the property prices in Indonesia fall by 40% because there's an Asian crisis, to Jared's thing, and gold only falls by 10, the smart guys will sell their gold to buy property, because property is the other thing Granddad told them it's okay to buy. So yes, I'm very bullish, but I'm very realistic that there could be a liquidity shock in the meantime, which is one of the reasons if I buy gold producers, I like to buy gold producers that have hedged, because they give you, in the short term they won't collapse and go broke, but in the long run they'll still make money. And talking about book, because that's what in the business we're in. But yes.
Can we just touch on that a bit more, because it is a frequent question that I get all the time. You know, risk is clearly going up. The market's going down. People are panicking. Why hasn't the gold price gone up today? Isn't it supposed to go the opposite direction? Very often, most often, when there's a serious market shock, the gold price will also go down. The reason why is because gold is doing exactly what it is supposed to do. It is providing a source of guaranteed liquidity when people have got to cover their other bad paper positions, right? So to put this in context, it really helps to look at relative gold volatility, and Sean gave the example of GFC, right? So from the middle of 2008, anybody who's paying attention could start to sort of see and smell trouble. But from 2008, we have basically Bear Stearns sort of kicks off the concern bubble. Lehman Brothers goes down in September. People start losing their minds in November and December. And we're in full-blown crisis by March, April, May. It wasn't until September of 2009, so 14 months after, 12 to 14 months after Lehman Brothers failed, and everybody knew the game was over and the world's going to hell. It wasn't until then that gold caught and basically went from $900 to $1,900 per ounce. Now, in the preceding 12 to 15 months, gold was basically trading inside of a $100 range. But it was trading inside of a $100 range around a $900 per ounce base. Right now, for the past 12 months, aside from a few spikes, gold has by and large been trading in a $100 range around an $1,800 price. So the volatility in the gold price is actually half of what the volatility was, or the variability, shall we say, around the mean is about half of what it was then. To me, gold actually looks much more stable. It's got a stronger setup now for an upside move, or positive response or positive institutional rebasing than it did in 2008 and 9. And again, going back to the money supply, in 2008 or 9, we were looking at a tiny fraction of the amount of liquidity which has been shot into this market. There has been a dying horse limping along the track being shot full of steroids by central banks for the last 5 years, and it is landing on its face. And I think, anybody who wants to believe that the market isn't going to crash, I sort of see them sailing through the air upside down in the car that's already flipped, and they just haven't hit the barrier yet. I think it's a really, really good time. Exactly. It's a really, really good time to be paying attention to what happens in a worst case scenario. And it may be that that car lands right side up, and it may be that the occupants look around and have a sense of relief, and we see this little thing called a relief rally. People are a little bruised, but they're fine. And then the car explodes, right? Which happens, and it will happen. We simply can't sustain the level of credit and risk in our environment right now. So we've been in a state of real economic and manufacturing contraction for years. Right, years. The only thing that's delayed this crash is COVID.
Yeah. I just want to ask the question: do all miners understand macroeconomics as well as he does?
No. You got to hate him, don't you? He's good at mining. He's good looking. The ladies are all here in the front row, and he understands macro as well. The closest thing we've got to George Clooney at this conference. That used to be my title. I'm very upset, Alex. Anyway, now in my head, anyway. So no, they're not. They're absolutely not. If they were, but that makes you even more comfortable buying Barton. I think they might actually know what they're doing once they produce it. I'm going to add one thing to what you said. In the lead up to the GFC, gold did very well. So gold anticipated and then reacted after, but in the middle, it was the liquidity event. If you think about what happened, gold gave us the warning in 2020 inflation was coming. Gold, when it went up on that rally, it was telling you inflation is coming, right? And it did its job. It's already much higher. So if you own gold from 3 years ago, those avocados don't look quite so bad. If you were using a rush account and you'd bought gold a couple of years ago and you're buying avocados today using your rush account, you'd be going, oh, well, I'm buying this with 3-year-old gold. These avocados are cheap. I'll have 3. So because you would be looking at it from a different perspective, right? So I think so it does anticipate, so it's anticipated, it's seen here. But to your next point, the catch, I like that expression, when it's afterwards, because whatever happens, and there is some kind of unbelievable conflagration happening here, going to happen, after it's happened, what we know is the only solution they have is to print money, and gold knows that, and gold will outrun that. I think I feel certain.
So I will just quickly ask, can we ask the question, is gold an investment or is gold money? And maybe put better, is money gold? And if so, why is money gold? One of the things that struck me in this conference is all of the people applying all of the labor that they do. So money is gold because it takes labor to produce. Now the crypto people try to perpetuate that or replicate that with proof of work. But the proof of work that is in this conference is absolutely remarkable. See people going out to remote areas of the country and digging and hoping and all this. And that is what makes gold money. And so money that takes labor to produce can reliably store your labor. I want to store my labor today so that I can use it in 12 months. I can exchange it for the labor of somebody who grew my avocado. That's kind of the point of view that we take on it.
Yeah, I totally agree with you. But in that case, then an Australian dollar is not money. That, do you know what I mean? Like, I think that's the only thing I think that if we think about, like, the money that we're used to, gold is not. Gold is real money.
So it's a money substitute.
Yeah.
But it cannot it took no labor to create, and it cannot store your labor reliably over time. And so you can ask Phil Lowe that question, and he doesn't want it to store your labor reliably over time. He wants it to depreciate by 2% a year. As his
sure. But copper also, to my point in my presentation yesterday, copper also in that sense is a store of value, and that labor is all caught up in there and whatever. It's just that it's a lot more clumsy to carry around than gold. I mean, gold is just
bulky,
perfect in terms of all that. So no, I mean, I think it is. I mean, look, the reason it's still around at 5,000 years, I had to debate crypto versus gold 18 months ago. I thought it was a pretty unfair debate, but someone would take the other side. But yeah, I mean, like, I said, I've been a bit flippant, but I said come back in 5,000 years and we'll have a discussion, right? Because, I mean, gold's got that history on it, right? And I think and certainly in large parts of the world, people are happy to speculate on the rest. I mean, Asia probably like crypto, like they like playing casino games, but value of storage is there. I mean, speculate there, store there, I think. Any other questions from the audience? We've got 5 minutes and 26 seconds left.
So many questions.
Oh, right, sorry. We're just having so much fun up here.
I know. I didn't want to interrupt.
Oh, this is like a father-son tag team going here with questions.
Aside from the monetary and value, the monetary inflation driving the price of gold, I wonder whether any of you would attribute much significance to utility value drivers like the expansion of space technology.
Sorry, the expansion of?
Aside from the monetary inflation driving the price of gold, I wonder whether you would attribute any significance to utility value drivers like the expansion of space technology.
Okay, thank you. Cameron, so from Perth Mint, like where like you see the gold go out, what industrial demand?
Very, very small compared to what if you look at the global demand, electronic demand is something like 8% of total demand on a global basis, so it's still relatively small. And you think the space area would be minute in terms of that. So vast areas, sort of dentistry and electronics is probably the biggest one. But yeah, sort of the space side of demand, it would be minuscule at this point.
I mean, I'd be all for it because it'd be a lot harder to recycle, wouldn't be coming back into the system. Whereas gold teeth, the people at the crematorium, they get all that stuff. They don't give it back.
Certainly not a price driver.
So, I mean, one of their best accounts at Perth Mint would probably be from the crematorium. But, the other stuff, it lasts, it stays around forever. But, I mean, the more we can send it, Elon Musk, let's get him into that, the more we can send into space, the better. But I don't think industrial demand is there, and it has amazing properties. I used to deal with a company called American Fine Wire in Singapore who draw gold out into these like fine hairs that every computer chip has to have gold. I mean, there's gold in all the stuff that we've got in our phones and the like, but it is extraordinary the lengths they go to and how fine they want to make it, obviously, because the high value of it.
Correct.
Another question out there?
I've got... This poor man's been waiting for a long time. There's a lot of you waiting, sorry.
I'm sorry.
Here we go, but we've only got 3 minutes left, so...
Speak quickly.
Good afternoon. I was just wondering, all of you sound like you've been dealing with the regulators and governments that have been giving grants and you're speaking with. Do any of them actually realise the value of gold and absorbing it themselves? You're talking about Asia absorbing it and China absorbing it. Are any of our governments doing that or recognising that?
No.
Maybe that's a no.
I mean...
Hang on, did you want to answer that question or was it... All right, hang on, Tony, hold on.
It's on this question. There's been an argument...
all the way to you. There we go.
It's been an argument for years. It's all right, countries that have no gold collect it because they need it, but we have it in our backyard. Why should we, collect why should we accumulate gold when if we really needed to, we could go and dig more of it out the backyard?
Look,
well, I think that's the logic that they gave for selling off Peter Costello, was it? As he smirked and sold off a part of it. But I mean, I disagree. Like in Russia, I mean, they buy the gold. All producers have to sell to the central bank, and they decide how much they sell. I don't think it'd be a bad thing for Australia and the Australian dollar if the government actually did accumulate. I certainly don't agree with why we sold, but I don't think they are. But that's the argument. I think that's right. I don't know if anyone's got a different view, but my understanding is those who produce it say, well, we don't need it because we can go and dig it up. I don't know what England's story was when Gordon Brown sold all theirs and created the brown bottom. That's a lovely pun, isn't it? The brown bottom in the gold market in the late 90s, because they obviously don't produce it except for a little bit of tiny Welsh gold somewhere.
So I would love to see Australia add value to the gold. You know, Perth Mint puts the bar on a plane, sends it to New York, and then the New York technology company gets a $3 billion market cap by providing it into blockchain networks. We need to do more of that here.
Yeah.
This is you know, one of our strengths.
Someone should create a company like that.
Yeah, how about that?
I think just back to the original question, you're really asking, like, what is the measure of a politician, right? Again, Western countries have essentially destocked gold because they've been so confident in the paper value of money, right? There's a fairly high arrogance factor in Western nations, as we know. You know, it would be really, really good if they did stock more gold. And why do they? Why should they, even if we are a large gold producing nation? Well, it takes a very long time to find and produce this gold. And when you need liquidity, it's not okay to say, hold on, wait 15 years, I gotta go find some.
Yeah. Great point.
And then dig it up and I'll come back to you, right? So I think there's a very strong argument for producers holding some of their product.
But you're being logical.
Yeah,
no, I know, right?
I'll also add that...
I'm not running for office, right? So...
I'll also, well, that's a whole other, we could be here for 2 hours. But the other thing I would say on that is that I could answer the question that RBA bought Japanese government bonds with some of the money it used to sell gold, and the yen's now at 25-year lows. So, you know, seriously, I mean, that was there just to create a bit more yield.
Can I suggest if we're going to stockpile something, maybe it should be oil?
Yeah, yeah, well, that would be a good idea as well.
We only got 6 weeks of that.
Yeah.
All right, they're out of time, ladies and gentlemen. Please thank, what a fiery panel. Sean Russo, Noah's Rule, brilliant chairman. Mark Hay, thank you guys, all really fantastic. What a way to finish 2 days of the Australian Gold Conference. I'm glad you're all relaxed and settled. Really interesting information, really interesting. And I think one of the things I took away from this was Sean saying they don't want you to wake up yet. They don't want you to wake up yet, but right now, with the money printing machine going brrrr, well, you need to understand that they can't print gold. I'm a passionate advocate for gold. A couple of things I'd like to say before we get into giving out more awards. And sorry, Alan, you're out of the running. If I pull your name out, you've already won. So we're going to put...
I was going to donate it to a deserving cause in the audience.
Oh, unspecified. All right. All right, okay, all right. Keep him in, we love it. I hope you've all had a great time. I'm going to actually call Fire, where are you from ABC Bullion? Come on up. ABC Bullion, these wonderful people, have